Hello and welcome to Insurance Business TV for our second Construction Insurance Power Panel of the year for Australia. We'll look at current market drivers and focus on how the weather impacts construction risks. Our experts are Peter Geeves, Head of Construction for Lockton, he's based in Brisbane, and Austin Rosier, Senior Risk Advisor for Omnisure, he's in Sydney. We're holding these panels quarterly, and Austin, last time we spoke, you and Peter both described a softening at the smaller end of the construction market, but there are still high risk areas that can struggle. What's changed in the last few months since we spoke, do you think?
Yeah, I mean, obviously we're in the thick of June end of financial year at the moment. So I think the big thing is certainly servicing capacities are still well and truly of concern. Actually, just getting terms out of insurers in a timely manner, I think is always going to be a challenge, particularly this time of year. But I don't think there's been any, I guess, significant changes. I think the thing we're still seeing is there's a lot of new agencies who've come to play, particularly at the smaller space, and they're being quite aggressive in trying to secure market share and obviously get off the ground. Then obviously you've got some incumbents who've often been quite stable and have been around for a long period of time, and they may not necessarily have either the capacity or even the willingness to drop down to that pricing because they want to make sure they continue to be around for a long time. So we're just seeing some interesting tensions between, I guess, insurers at the moment and how they're viewing risks and trading risks. But yeah, I wouldn't say anything significant has shifted in the last few months, just more of the furthering what we last discussed.
And Peter, what about for you? Any interesting tensions or what's changed, if anything?
In the last few months, as we lead into what Austin has described as probably the busiest period for the intermediate insurance component of the industry, we have seen further softening in the larger space. As we've seen the capacity come into the market and appetite increase in previous quarters, but we are now seeing that culminate with significant softening of the market. What's that mean, and what are we seeing in terms of things occurring on the ground? Well, we're seeing capacity-driven accounts that historically were challenged. We were challenged to get 100% capacity, and now getting oversubscribed. We've got capacity. I've got one at the moment where last year I was struggling to get 100%. Now I'm at 135% and didn't have to try too hard to get that capacity. And we are seeing premium rates starting to come down, and negotiations in deductibles and wordings and endorsements where insurers have previously been inflexible and now willing to negotiate on those terms and conditions. So yeah, in the last few months we have seen the market soften further. So it is certainly a changing market condition in that larger contractor space.
Let's have a look at weather risks, because that's one of the big risks in the construction sector. Austin, can you just paint a picture for us of what some of your clients are facing there?
Yeah, I mean, look, I think this year has definitely improved upon prior years. I mean, we got almost 6 months into the year without a major loss, which is probably better than anything we've seen in the prior 5 years. But I think probably the real, I guess, climax of issues was sort of that end of 2021, start of 2022, where we had a significant run of sort of rain, fire, flood. Then obviously a lot of the COVID-19 related supply chain issues as well. So I feel as though clients are definitely in a better stead now, and they're probably looking towards these issues and actually trying to prepare for them and react to them. But it's something that they're going to have to continue to be mindful of. And I think the reality is climate risks are generally a macro level issue or have macro level causes. And the vast majority of businesses in this country, even to refer back to the ABS stats we're looking at before, they're all micro level. Like they, on a single-handed basis, are not going to be able to impact climate change or climate risk. So for them, they really have to make sure they're preparing and adjusting their behaviors to be prepared for some sort of issue that's weather related.
And Peter, last time we spoke, you mentioned some of the projects that you're connected with up in Northern Australia that could have weather risks. Can you talk about the sort of insurance challenges that's creating?
Yeah, look, whilst the insurance market conditions have improved substantially and we are seeing competition and capacity enter the market, insurers remain cautious of risks that are susceptible or exposed to severe weather conditions and particularly natural catastrophe losses such as cyclones and floods. So they are, particularly on projects, requesting more detail, underwriting those risks more closely, and our clients need to make sure that they're fully across those exposures, and the way in which they're going to manage those exposures throughout the construction delivery. They're going to be critical to ensuring that they get the best terms in the insurance market from both a coverage and pricing perspective.
Let's talk a bit more about what you can do as brokers to help these clients. Austin, as a broker, I mean, what can you do, or what are some of the things you do to help construction clients do better with these risks, these weather risks, and get I guess, a better deal on their insurance?
Yeah, of course. I mean, look, we've touched on it historically, and a lot of our clients are playing at a very different level to the large civil infrastructure clients that Peter tends to deal with. But the thing that we're finding is I guess, weather specific options like a parametric cover, for instance, they're not feasible, they're not practical, they're not affordable for our clients. So there's really got to be a focus upon planning and education. So for us, it's actually having these conversations, going, okay, have you thought about this? Okay, let's look at your Gantt chart. Let's look at your plans. If you have delays here, like I've had a large ongoing multi-stage project for a client of ours that is involved taking the roof off of a building, adding multiple stories onto it, etc. Now, obviously, that's had to be planned very carefully in light of weather issues, because one, they're not really going to have cover once the roof's off should there be a large rain event. And two, these sorts of things don't often happen overnight. So they actually need to find good windows and also make sure they've got contingencies if there is some sort of unexpected weather in that period of time. And then it's also just having conversations with them around the types of projects they might take as well. So, I mean, obviously that roof off one's a good example of a project that in the last few years has probably attached a higher level of risk than might have previously. And we're seeing, I guess, people shift to, if they can, quicker construction periods, because delays are one of the really big things that we're seeing impact businesses in this sector and impact construction companies. And unfortunately, there's not, I guess, a significant insurance solution there. To that effect, obviously, if you have a large weather-related loss and you go, okay, my construction site is now a swimming pool, yes, you'll have some cover there for the actual reinstatement of those works, and some expediting costs and the like, but the business cost is rarely accounted for. So if you have a project that was meant to take 12 months and it's now taken 18, and that's taken 6 months of alternate projects that you can't now do, and you're not necessarily going to make up that same level of income that you would have had the project finished on time and you've been able to start another one. So that's probably one of the really big things we're having to talk about with our clients, making sure they're actually building in buffers into their schedules and programs, and also making sure they're, I guess, charging for that accordingly too, so they're not left with a project that's 6 months overdue and they've made no money on or lost money on.
And what about you, Peter? Is building in those buffers important as well? Or what's an example of how you're trying to help these weather impacted clients?
Yeah, look, our philosophy is very similar to Austin. I think construction is construction. I don't think it changes. It's just how big the risks become, the larger ones are. So building in a resilience into the construction activities that are being undertaken is going to be really important. The construction program, as Austin mentioned, is critical. You know, where possible, we encourage contractors to undertake high risk construction activities outside of severe weather events zone times. Outside cyclone periods if possible. Also looking at the timing, monitoring weather conditions as you do other high risk activities such as pouring cement and so forth are going to be critical moving forward. Also the construction methodology, what materials are you using during construction are going to be important. How you build those site, how you build is going to be important. And things like slight laydown areas, are they flood prone? Are they in areas which are flood prone or exposed to severe weather conditions? They're things that just need to be considered when designing or when determining where to put your site lay down areas and those sort of things. And finally, having a full severe weather management plan that identifies how you identify and prepare prior to severe weather events occurring, and then what to do post those events, how to manage losses as you go through those a severe weather event, and ensure that your project is resilient enough to deal with those risks as you go through it.
Mm. Peter, let's stay with you and talk about what the insurers are doing to help in these situations. I mean, are you seeing many new offerings, Peter, or what can they do to help brokers like you dealing with these weather risks in the construction sector?
Look, with the larger projects, parametric solutions continue to offer a unique alternative to traditional insurance solutions, and they can cover a lot of the exposures that Austin referred to, the business exposures that traditional insurances aren't able to offer. Unfortunately, outside of that, we're not seeing any new products. But what I would say is that if you are able to, sell your risk to insurers more meaningfully, then there is the opportunity to increase the level of coverage available to you for these severe weather conditions. So ensuring that you're best placed at renewal to present your risk in the best possible way, and showing insurers how you manage these risks is going to put you in a good position in terms of both coverage and pricing.
And Austin, what about you? I mean, I imagine parametrics maybe not so much of an option. Is that too expensive for your sort of clients, or are you seeing parametrics as an option there?
Yeah, no, look, that's exactly right. It's unfortunately, even for a business doing 50 mil plus of revenue, the cost of a parametric is quite significant. And so it's occasionally a consideration for large single projects. But unfortunately, even then, it's just not something that's affordable or practical. And because it is more unknown, it's something as well that we're not necessarily seeing principals be familiar with. So where a principal may cover some insurance costs, something like a parametric is not just getting the construction company on board, it's also getting the people who will ultimately pay for the policy on board, which can be more challenging, particularly on some more, let's call it finance or cash strapped development projects, where they just go, look, that's just a cost we can't stomach right now. We have seen, I guess, some insurer response. So, for example, Mecon's offering a 3-month buffer on their maximum project duration just to respond to some of the delays. But the reality is it's more of a minor buffer and a coverage benefit. It's really not going to assist in responding to some of these significant delays that we saw a couple of years ago. And if we are going to go through a period of extreme weather like that, we've got months of consecutive rain and we just can't get a dry work site. And then you've got everyone trying to line up their same trades or their concrete pours on the same day. It's you're gonna have to manually extend it and incur the cost to do so. 3 months isn't going to be sufficient for that sort of a change. So, yeah, I think the thing that I would like to see, and it's difficult to implement in practice, but some sort of business interruption coverage, just kind of addressing the problem whereby you may not be able to work on other jobs. I guess if you look at an ISR or a traditional property insurance program, if you have a large claim, that means you can't therefore produce, so your production capacity is limited. You are going to get, I guess, your gross profit or your wages or something of the sort paid over to you in that time. And there's just nothing that really exists in a similar vein in the construction space. But again, the construction space has suffered such significant losses in recent years. This is something that would probably further that. So I can't imagine insurers would be overly keen to offer a product that would have large potential to be claimed upon. And in a similar vein, there's probably a significant cost to the clients to actually obtain that. So there's also questions to whether or not that's something that actually pay for, again, in an area that has been quite challenged in recent years.
Well, thanks. They're interesting thoughts, and it is a tough weather risks are a very tough challenge. That wraps up our panel looking at weather risks in the construction industry and some market trends. Thanks to you both very much. And from Insurance Business TV, bye for now.